Hello, welcome to Jowakirogo Associates, a tax and consultancy firm. My name is Phyllis Mbogo. Today, we are going through the basics of value-added tax, what it means, the different rates, and why filing on time is so important. By the end of this short video, you'll understand how value-added tax works and how to avoid costly penalties. Now, to dive into our definition, it is a type of consumption tax charged on goods and services at each stage of production and distribution. Now, the standard rate or the general rate charged by Kenya Revenue Authority is 16% on most taxable goods and services. Now, there is zero rated tax, which is basically means this is 0% for specific items listed on the Value Added Tax Act. Now, there are exempt supplies which are not taxed and related to input VAT, which cannot be claimed. Now, we can give an example. For zero rated supplies, they are taxable at 0%, meaning you charge 0% VAT, but you can claim input VAT. Examples are export goods, medicines, sanitary towels, and agricultural pest controls. Now, exempt supplies, there is no VAT charged and no VAT is claimed. Example, they are financial services like banking fees and interests, education services, and medical and health services. Now, standard rated or general rated, they are normal taxable goods and services charged at 16% unless listed as either zero rated or exempt. Examples are electronics, furnitures, clothing, and shoe. Value-added tax should be filed on or before 20th of the following month. An example, if you're supposed to file for value-added tax for the month of August or September, you're supposed to file it on or before 20th of August. Did you know that filing VAT on time could cost you thousands of penalties? Now, failure to submit VAT returns on time attracts a penalty of 5% of the tax due or 10,000, whichever is higher. If you file the return but don't pay the VAT on time, KRA charges an interest of 1% per month or part of a month. It is calculated on the unpaid tax until fully paid. This interest is compounded monthly, meaning it keeps on accumulating. If you pay VAT late, KRA also charges a penalty amount of 5% of the tax due, and this is separate from the 1% interest. An example, assume you have a VAT due of 50,000 Kenyan shillings. You filed and paid 1 month late. You will be charged for late filing 5% of the 50,000 or 10,000, whichever is higher. In this case, 12,500 shillings or 10,000 shillings is higher. Late payment penalty, you will be charged 5% of the 50,000, which is 2,500 shillings. Interest of 1% of 50,000 is applicable, which means it is a payment of 500 shillings. These penalties and interest total up to 13,000 Kenyan shillings. In case you have any queries on how to file value-added tax or in need of tax consultants, we will walk with you through this journey. Jowakirogo Associates are certified public accountants who will walk with you through this journey. Kindly reach to us via our website and the link that will be provided. Stay compliant, file on time, and avoid unnecessary costs. Regards.